What is going on in the stock market? What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the hoodie to prove it. And today we all just need to have a little bit of a chat about the state of the stock market right now. You may have noticed lately, the stock market doesn't make any sense, or it makes even less sense than usual. NEO posted an incredible quarter's earnings yesterday. We were trading up over 9% in the pre-market, and the day closed down about 8.5%. Apple stock was down 3% yesterday. Pretty much all across the board, big tech stocks were down yesterday. And on the screen right now is a quick recap of what actually happened yesterday. The S&P 500 closed down 0.8% for its first negative day in 8. 9 out of 11 sectors were negative Tuesday, led by utilities down 2.12%. The Dow closed down 0.36% for its first negative day in 8. And the NASDAQ closed down 1.69% for its third straight negative day. Pretty weird day altogether. Now, the main concern that investors have right now is the fact that the NASDAQ seems to be underperforming for the last few days. And guys, let's not panic. This is all part of the process, simply put. The market is and always has been cyclical. If it wasn't, everybody would just invest in the NASDAQ, or they would just invest in the S&P 500. They would just invest in the one that does the best and never goes down. That is not the way the stock market works or ever will work. So today what I want to do is I really want to discuss, why is this happening now? Why is this change happening now? If you are primarily in the NASDAQ, if you are primarily in tech, should you be worried? And also what I am going to be changing within my portfolio over the coming weeks, more than likely. So right before we get into the video, guys, can I please ask you to smash a juicy like, as it genuinely helps me and the channel out so much. I would really appreciate it. I have two incredibly exciting videos coming out this weekend. One should be out on Friday and one should be out on Saturday. But let me tell you, these are going to be two of the best videos we've ever had on this channel. Please, if you're new around here, hit that juicy red subscribe button so you never miss a video. I appreciate all of you showing the support lately. And please do drop me a comment down below. Let me know what you think of the video. And also let me know what you think of the market right now. And if you personally are making any changes within your portfolio. With that being said, guys, let's get to the juicy information. Tuesday's close yesterday. The Dow down 0.4%. NASDAQ down 1.7%. And the S&P down 0.8%. Over the last couple of months, we have all become very acclimated to seeing the NASDAQ outperform the S&P and the Dow Jones. Now, there's been a few exceptions. There's been a few times the NASDAQ's underperformed for one reason or another, but in general, we see the NASDAQ outperform. Pre-market today, now this is about 6 hours before the market opens. S&P up 0.7%. NASDAQ up 0.83% and the Dow up 0.87%. So we're looking like a green day all around. What's moving pre-market? Two things I want you to look at here, because we will speak about this later on in the video. Norwegian Cruise Lines up 4.22% and Boeing up 2.3%. The last 5 days, the Dow Jones up 2.82%. The S&P 500 on the 5-day chart, okay, up 0.51%. And the NASDAQ is the big loser, down 1.66%. Now, if we go to the 6-month charts, okay, the Dow Jones is still down 6.3% from where it was 6 months ago. The S&P 500 is still down 1.35% from where it was 6 months ago. The NASDAQ is up nearly 11% from where it was 6 months ago. If we actually go from the bottom, the NASDAQ is up over 57%. The S&P is up 49%. And the Dow Jones also is up 49-ish%. So the NASDAQ has outperformed, simply put. Now, there is a handful of tech stocks in particular who have had an absolutely disgusting last few months, people. If I am to show you somebody like Spotify, okay, and we go back to the start of April near the lows, since then they were up well over 200%. They were up 216%. After a little sell-off, they're still up 180%. All of this happened over the space of 3 or 4 months, people. In the span of a year, a lot of investors would be happy with a 15% gain, and Shopify returned over 200% in about a third of that time, not even a third of that time. And there's way more examples than just Shopify. Spotify, another company who was up well over 100%, they were up as much as close to 150%. Zoom, another company who was up in excess of 200% before this sell-off started happening. Fastly, a company up over 900%, people. CrowdStrike, 250%. You get the picture. There have been some absolutely insane movements in these tech-related companies over the last, 3 to 6 months. And simply put, people, the market is cyclical, okay? It always has been, it always will be. People will always buy stocks and people will always sell stocks. And if you see an investment you've made go up over 200% in value over the span of 3 to 6 months, you are going to be somewhat inclined to take that value, especially when you can see that the company is in the short term overvalued. The NASDAQ, simply put, has outperformed. Tech has outperformed. Growth stocks have outperformed. What I believe is happening now is people are taking their profits and reinvesting it into some companies that may have underperformed. So we've all seen it. All of the big tech companies, bar a very select few, were down anywhere from 1 to 4+% on average yesterday alone. Wells Fargo, okay? This company has done horrifically, okay? Absolutely horrifically. They were up 2.5% yesterday. They're up 1.5% pre-market. Norwegian cruise stock, okay, up over 3% yesterday, up over 3.5% pre-market. Cheesecake Factory, 2.39% up pre-market. Wynn Resorts yesterday, up over 8% and up again in the pre-market today. Even airline stocks, Delta Airlines, up 1% yesterday, up 2.26% today. Simply put, a lot of people are now trying to get into these undervalued companies, ones that were hit particularly hard because of the virus. A lot of it comes down to the travel sector as of right now. That travel sector primarily will include your airlines, then your hotels and restaurants, and then cruise lines as well. Because I mean, pretty much no matter where you are in the world now, you know, a couple of months ago, there was no hotels open, there was no restaurants open. Just yesterday I was at a restaurant, a week ago I stayed at a hotel. You can do all of these things again. They are opening back up. And there's a lot more people flying right now, people. The TSA checkpoint travel numbers for 2020 and 2019, we hit our first 800,000 plus day. Quite consistently now, guys, we're getting relatively close to say 30% of passengers flying compared to what was flying last year. That's a lot of people when we decide to scroll down a couple of months. And you will all remember this, we had loads of days that were under 100,000. We had loads of 70s, 80s, 90,000 days. Now things are looking a lot more promising in general. We speak about Delta Airlines, who was my first love in the stock market, okay? A lot of you might remember this massive, and I mean massive run up. Airlines in general, everybody did this. American Airlines was up over like 100% in the same time period, but over the span of a couple of weeks, we saw 60-70+% of value given to us airline investors. And this was in no way warranted, people. This was the 8th of June. Things weren't looking good at this stage. And this actually convinced me to sell out of my airlines because we saw a massive rise, okay, that was not necessarily justified, and I thought that there would be better place to put my money than these prices in airlines. And sure enough, it proceeded to give back over 30-32% of that value over the coming months. Now we can see airlines starting to make a little bit of a run to the upside again. For Delta Airlines, we're just shy of $30 a share right now. We probably will hit that in the pre-market. Delta has not been $30 a share very much, okay? After that run up, we came down, and it's been below it ever since. If I show you Southwest Airlines, we see a similar thing. You know, we all saw a really nice run up, okay? Some people sold off, it kept going down, and now it's starting to come back up. We even see the same thing with American Airlines, okay? That was the massive jump I was speaking about with them. They crashed very hard, like how much value they actually gave back, over 45%, and only now are they starting to make that recovery as well. So simply put, a lot of people are just taking their profits, okay, and they're bringing them on over to these undervalued stocks. If you're an OG on the channel, okay, you will remember me speaking about Carnival Cruise Corp quite a lot. And when we used to speak about Carnival, okay, I'd always say that cruise lines in particular were a very cyclical sector. We've seen that. We saw from the bottom Carnival go up over 200% from the 2nd of April to the 8th of June. We've also seen them give back quite a lot of that value, okay, give back nearly 50% of that, and now they're starting to make a little run to the upside again. Now personally, I'm still not confident to touch off any cruise related companies. This is coming from a man who has a lot of his portfolio in growth, in tech, in EV. Even I don't have the stomach for cruise lines right now. But this is the cyclical nature coming into play. I mean guys, we see those, let's call them micro cycles, happen all of the time. Right when the crash bottomed out, we went up 13.66%. We then proceeded to go down 5%, okay? We go up, okay, and every now and again, there is a very fast dip of over 5%. There is another example of a few days down 3.69%. From the highs to where we are now, we're down nearly 3%. These things happen very often, people. Despite what people like to believe, stonks don't only go up. There will always be minor pullbacks here and there. Now, does this mean that we should start emptying out our tech giants? Should we all sell Apple, Facebook, Amazon, Google? No, people. Yes, Facebook's down 4.59% in the last 3 trading days. Before that, they had gone up over 15% in the span of a week or so. Apple down 3.97% in 4 trading days. They were up nearly 20% in the 6 trading days prior. It is all just part of the cycle, and there is no reason to panic. And honestly, I don't see this lasting a long time. I don't think it's going to be a prolonged dip by any means whatsoever. Now me, I think everybody knows on the channel, I have a large focus in tech stocks and growth stocks in particular. Most of my growth stocks, to be honest, are in EV, which again could be argued to be tech stocks. And as of right now, about 65% of my portfolio lies in those companies. The rest of that is essentially in dividend paying companies. Now I am young, I'm an aggressive investor, I'm absolutely fine with that. I do honestly plan on potentially branching out a little bit soon and putting a little bit more money into some of these beaten down companies. I'm still not confident enough to get into cruise lines or even airlines at this stage. Banks, I might be willing to put a very small amount more money into quite soon. And then I do want to start getting into some hotels and restaurants. I haven't done enough research into them just yet. I don't know who I want to get involved with. They all do still seem extremely volatile, and there does still seem to be quite a lot of, hype around these companies. So I will be doing a lot of research, and I am hoping to get into at least one, if not 2 or 3 of these companies in the near future, because diversification is important, people. I want to show you this quickly. I know it's not the cutest graph in the world, but it gives across information that we need, especially if you are somebody like me who is heavily invested in big tech, aka somebody who really likes the NASDAQ. If we just go through the years, this goes all the way back to 75, okay? NASDAQ didn't win. NASDAQ won. NASDAQ won by an awful lot. 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 You will hear me say that very many times. Now let's go forwards to the more recent history. 2019, NASDAQ won. 2018 we won. Okay, 2017 we won. 2016 we didn't win. Oh no, 2015 it won. 14 it won. 13 it won. 12 it won. It goes on and on, people. Just because the market is cyclical does not mean that you have to sell, does not mean that you have to go get heavily involved in the Dow or the S&P. I do personally believe it is very good to be diversified, because when the NASDAQ gets hit, it can get hit very hard. .com period, okay? NASDAQ lost absolutely horrifically. 2008, NASDAQ, it lost, okay? It didn't lose horrifically, but it lost. 2008 though, it came back and it absolutely smashed the rest of the competition. Even when the NASDAQ goes through a really tough period of time, it generally will come out on top over the coming years. If we just quickly compare the NASDAQ, the VU and the Dow. 6-month chart, okay? NASDAQ is winning by far. 1-year chart, NASDAQ is winning by far. 5-year chart, NASDAQ is winning by far, and I think you get the picture. So do we need to get in a panic? Do we need to sell everything? Do we need to take profits and reinvest in some bank stocks, some travel stocks, a cruise line, an airline? No, not by any means. You don't have to. If you are somebody who got into one of the massive growth stocks and made 200, 300, 400, even 500% over the span of a few months, it probably does make sense to sell out and get into some more undervalued companies. Because let's be real, more often than not, a company that is up 200% isn't going to see that same return over the next few months. It really is that simple. And let's also remember that if you're like me, you're a long-term investor. And if you want to be a long-term investor, there is going to be a lot, and I mean a lot, of cycles where the NASDAQ isn't doing the best. It's that simple. Some of them will last a week. Some of them will be 6 months. Some of them will be a year. Some of the growth stocks you choose will lose. Some of the tech stocks you choose will lose. Some of the stocks you choose will lose. If you are heavily in tech and growth, that is something you need to understand from the start. If you can't afford to lose ever, don't invest in them. Don't invest in growth stocks at least. Just, maybe get into some big tech, do some ETFs, do your thing. The market can be scary, but if you've done due diligence, if you've done your research, you should be fine holding right now. But that, guys, is what I believe is going on in the stock market right now. So in regards to me, and do I plan on making any changes within my portfolio? This week, I don't plan on investing very much whatsoever, to be honest, just because the market is moving a little bit weird. Ultimately, I may end up investing a little bit more into some of these travel related companies, as I have said before, but to me, tech and growth is still my baby. EV, massive tech, the FANG stocks, they're my babies. They are my bread and butter, and that is where my money will continue to go going forwards, in all honesty. I don't really ever want to have more than 70% of my money in the NASDAQ and in growth, because they're probably two of the most cyclical places you can have your money. I would rather keep that down around the 60 to 65% range. So now it's time for me to go find some value plays, which for me more than likely will be in banks and restaurant/hotel related companies. That is my plan right now, but as always, that can change. But anyway, guys, if you have watched until the end of the video, I really hope I was able to give you some insight and value into what is actually happening in the market right now, because I've been getting asked about it quite a bit. I hope I was able to give you some entertainment as well, and I hope that you did enjoy. And I hope that you like this sick hoodie I have. The link is in the description if you want to pick one up. Thank you all so much to everybody who has picked up a hoodie. It genuinely means a lot to me. I hope you all have an absolutely fantastic day. Please drop the video a like if you haven't yet. I'll see you for the next one. Peace.